This morning, lost in translation, learning from the first 60 days in association, or an association between the CILT and BDO. So thanks again very much for joining us. This is a topic that's obviously been in the news and continues to be in the news. It's taken up a lot of column inches, whether it be shellfish in Scotland going to waste, or issues with the Northern Irish situation, the lawless paramilitaries coming out of hibernation, and cricket pitches not being able to get compost or soil into the country. So the summer looks like it's going to be a damp squib for those people. Obviously, there's a lot of press as well around issues at ports, shortages, delays, and obviously whilst the post-Brexit terrain has had an issue, this has been exacerbated by a shortage of containers and disruption of shipping as a result of the pandemic. So we have had a few issues, but what we thought it'd be really useful to do is to get our Customs Director, Juliet Wallwork, and we'll introduce ourselves shortly, to give us a rundown, an indication of the kind of things that have been coming out in conversations with various companies and clients, as people are getting used to what it looks like, what the transition or post-transition arrangements look like, and some of the issues that they're dealing with. So that's the plan. Juliet will talk for about 35-40 minutes, and then we'll have a Q&A at the end. If you can use the Q&A function on the Zoom app, that'd be great. And if you could save questions till afterwards, that would also be very kind. If you want to leave any comments or feedback, if you could use the chat function for that, that'd be most welcome as well. Can we go to the next slide, please, Lauren? Have we got slides?
There we go.
Yeah. If we just go on to the slide. So if I just introduce myself, my name is Nick Eggett. I am part of BDO, and I'm the supply chain and logistics risk lead for the risk and advisory services team. I'm a member of the Institute and part of the London region. I'll hand over to Juliet and let her take it from there.
Thanks, Nick. Good morning, everyone. My name's Juliet Wallwork. I am the Customs Duty Director with BDO for the regions and the north of the UK. I've got over 20 years experience of consulting in this area, and as you can imagine, at the moment we are spending an awful lot of our time helping companies deal with the implications of this new trading landscape, which we've had since the 1st of January this year. So today I'm going to talk through trade and customs, and in particular I'm going to talk through the new trade and cooperation agreement, which was announced very late in December, and which sets out the terms on which we trade with the EU now. So this is something which is causing a lot of issues amongst companies, particularly companies which have got EU-UK supply chains. It's a piece of legislation that came in quite late in the day, so it lacks certain details. But what I'm going to try and do today is talk you through some of the key points around this and some of the risk areas as well to be aware of. Could we have the next slide, please? Thank you. So, as of 1 January, we reached the end of the transition period that was in place for a year following our departure, our formal departure from the EU. So in that transition period, as far as trade was concerned, trade with the EU, we didn't really see any changes. We were still able to move goods they call it frictionless, so there were no reporting requirements, and we didn't see any additional costs come into our supply chain, any additional taxes. All this changed as of 1 January this year, when the Trade and Cooperation Agreement came into place. Now, this is what's called a free trade agreement. And the first thing to say is that this is not the only free trade agreement that the UK has entered into. The UK has also entered into similar types of agreements with other third countries around the world. But I think because EU is our nearest and possibly largest trading partner, the focus in the media and for a lot of companies has very much been on the UK-EU Free Trade Agreement, which is called the Trade and Cooperation Agreement, or the TCA. Now, this is also referred to sometimes in the media as the deal. So in the run-up to the end of last year, there was a lot of concern that we weren't going to get a deal with the EU. This was announced at the end of December, and therefore the reports were, we now have a deal with the EU. This brought with it quite a lot of perceptions or misperceptions, however you want to describe it, which didn't quite match up with the reality. So what I've listed on this slide is some of the responses that we have heard from clients in the first couple of months of trading under these new arrangements. So one common comment that we hear is, well, we have a trade deal now with the EU. That's okay. We don't need to worry. We have no customs formalities when goods move between the UK and the EU and vice versa, because we have a deal in place. The reality is not that. The reality is that we have now seen the introduction of customs formalities. And by these, I mean the requirement for declarations about the nature of the goods, about the value of the goods, about the type of goods, to be submitted to the customs authorities at UK ports and EU ports when those goods move. So even though we do have this FTA, we still now have this new requirement for these customs declarations to be submitted. On that note, when you are exporting goods from the UK to the EU, we now have full customs formalities in place, so full requirements. This is one of the reasons why we have got hold-ups at ports when goods are leaving the UK. It's because the correct information is not there and is not being presented to HMRC, the UK customs authorities. For imports, it's a slightly different scenario. The UK government announced that they would allow for a period of up to 6 months of effective easements in which they said we won't be carrying out full border checks, full border controls on goods coming in to the UK from the EU. So if you will, for imports from the EU into the UK, we are at the moment in a bit of a period of lull, almost a period of false security, I would say, because only limited declarations are being submitted. And the danger is that at some stage in the future, these limited declarations will have to be revisited and the full details submitted. Now, as from 1 July this year, those easements stop. So it is highly likely at 1 July this year, or around the middle of the year, we will see further disruptions when we move to full customs formalities for inbounds into the UK from the EU. The second perception is that it's okay, we've got a deal. It means that we never have to pay customs duties on our goods we're buying from the EU, or the EU customer doesn't have to pay duty on goods which we are sending to them because we have this trade deal in place. It's all duty free now. That again is not correct. What these free trade agreements do is they offer the opportunity for duty-free movement of goods, but they have one very key criteria in them, that duty-free status only becomes available if goods acquire something called preferential origin status. Preferential origin status is designed to ensure that there is sufficient economic added value in either of the party countries. And by party countries, I mean UK or EU. In other words, if you are buying something from a German supplier and they have manufactured that product in Germany, they have used German or EU materials to manufacture that product, there is a good chance that you will be able to import that into the UK without having to pay any customs duty on it. If, however, your German supplier has brought that item in its finished status from a Chinese manufacturer, just held it in its warehouse and then sold it to you, you will still have to pay duty on that when it comes into the UK, because it will not have met preferential origin status. There will have been no economic added value done to it in the EU. So therefore, when we hear companies say it doesn't really matter what the customs origin of my goods is, and by customs origin we mean where have those goods been made, not necessarily where have they been shipped from, that is wrong. With this free trade agreement, in line with any other free trade agreement, the customs origin of those goods that you are buying from the EU, selling to the EU, and in fact selling from the UK to any third country where we have a free trade agreement now, is key. It's the key bit of information that you need to understand. So then customers say, okay, we get that, but if I buy from an EU supplier, then I can assume that those goods are of EU origin. That's right, isn't it? And again, not necessarily. I take you back to the example I just gave of an EU supplier buying goods from, say, China, the Far East, the US, in their finished state, keeping them in their warehouse, and then selling on. So just because you are buying from an EU supplier does not necessarily mean that those goods are of EU origin. Keeping with that point, well, okay, I've asked my supplier and they say, yeah, don't worry, those goods are of EU origin. I don't need to do anything else. Again, not necessarily. All of these areas are to do with risk and compliance. So it's key that you, as the importer, check that as much as possible, as much as reasonably possible, that your supplier has evidence to show you that those goods are of EU origin. Okay, well, I think my goods are of EU preferential origin. I'm not 100% sure, but I'm just going to say they are. And that could be either goods coming in, or it could be if you are sending goods out. You're not quite sure. You think you might meet the relevant rules of origin to send your goods to customers with this preferential origin status. No. The clear rules here are if you are in doubt as to whether or not your goods meet the criteria, do not say they do. The number of companies we have spoken to since 1 Jan, particularly exporting to customers in the EU, who are now putting statements on their commercial invoices, on their packing lists, on their delivery notes, saying that these goods are of UK preferential origin, all in order to enable for their customer in the EU not to have additional cost, not to have to pay duty. And then we say to the customers, we say to the clients, do you actually know that you meet the relevant rule? Can you actually evidence it? And they say no, but we're just going to put it on anyway because the customer is telling us they must have it. Which brings me on to my last point, which is both HMRC and their counterparts in the EU will check this. At the moment, we won't see many checks because both sets of authorities are trying to get their heads as well around Brexit, and the focus at the moment is on maintaining the free flow of goods. But customs authorities do audits. When they do audits, they can go back 3 years. And one of the things that we fully expect to happen next year is both the HMRC and the EU customs authorities, to go back to importers who have imported goods and claimed preferential origin status, so avoided paying duty that would otherwise be due. And we expect those customs authorities to ask those companies to give them evidence that those goods meet. And they can go back 3 years, and it's evidence at the time of import, not what evidence you could provide now. The way this works is within the agreements, if the EU customs authorities, say in Germany, didn't quite believe that something coming from the UK really did have UK preferential origin, they request that HMRC goes in and does an audit on that UK company. And HMRC has to agree to do this. So in other words, if HMRC in the future takes a more relaxed approach to this, it doesn't matter, because whenever an EU customs authority requires a customs audit to be done on anything being exported from the UK with this status, HMRC have to comply. So as you can see, this is not an area to be taken lightly, and it's something where a fair degree of caution is required, both if you are importing and exporting. If you do approach this in the right way, it's great. You certainly can then avoid having to pay any additional cost in your supply chain. And duty rates vary from 0 up to 14 or 15% of the value of the goods that you are moving. So in certain instances, it can be quite substantial. Next slide, please, Lauren. So I've mentioned preferential origin status. So the next question is, well, then how do you determine if your goods have preferential origin status? Well, what you have to do is you have to look to the specific TCA agreement, and that contains an annex which contains origin rules. Origin rules are different. There is not just one origin rule. We have a number of origin rules, and the origin rules are all organized by the classification of the goods. So different types of goods will attract different rules of origin. We have 4 main types of origin rules, and I just want to quickly explain these to you. I don't propose to spend a lot of time on them, but the point I want to get across here is that these origin rules can be complex. So again, don't treat them lightly. So the first type is change in tariff classification. And what this says is, if I'm manufacturing something in the UK, if I use UK parts and materials, that's okay. If I use EU parts and materials, and I'm doing a manufacturing process, again, that's okay, my goods would originate. But if I used materials which are considered to be non-originating, and by that I mean materials that come from anywhere else apart from the UK or the EU, I have to make sure that I do sufficient processing on those so that my finished item meets the criteria. So the first thing is, if I'm using materials which are classified elsewhere in my customs tariff to the finished product, then that's okay. That's called change in tariff classification, and that's the rule I apply to my non-originating materials. So that's one rule. Sometimes it requires a change in classification of non-originating materials. The second type of rule describes a specific production process which has to take place. So it's very specific. It says what you're producing will only originate, will only give you that duty-free status when you export it, as long as you follow a very specific production process. The third type of rule talks about looking at the value of the finished product and making sure that any non-originating materials are no higher than a given percentage. So this rule requires you to get a bill of materials to understand the origin of all those constituent bits that go into your finished goods and to understand the value of them. And then the final one is any other requirement which is something called wholly obtained, for example. And we have an example there on the right. So wholly obtained tends to relate to food products. It's where, or animal products, it's where things are either grown or raised or mined. It's very easy to see that they come from a specific country. Now that's fairly straightforward. We've got these various rules. The additional complication is they can all be mixed as well. So it's not just necessarily one rule. If you look at the annex in the agreement, sometimes it mixes the rules up and requires you to meet two of these rules. So on the right here, we have an example of this. We have an example of a wholly obtained rule. As you can see, this for dairy products falling under Chapter 4 of the tariff. And the rule there says, if what I'm producing is to be considered as originating, all the materials I use to go into that have got to be wholly obtained, i.e. produced from animals which have been raised in the UK or the EU. And I've got an additional rule that any non-originating materials of heading 1701, which is sugars, can't be more than 20% of the weight of the finished product. So as you can see, it's quite a complicated scenario. Next slide, please, Lauren. I've got a couple more slides here as we go through, which gives you an example of some of these other rules. So Chapter 33, this is your cosmetics section. And this, again, here is saying you've got to have a change in classification. That's what the CTSH means. So a change in classification for any non-originating items that you are using, or a chemical reaction to that specific process, or you have the choice of saying, I'll look at my bill of materials to make sure that my non-originating materials are no more than 50% of the ex works price of my finished product. Next slide, please, Lauren. And then I suppose the most complicated one, which we come on to now as the final example, is the textiles area, so materials, clothing, etc. As you can see here, this is for textile fabrics and yarns, and those are the typical types of rules of origin you see here. It's not enough just to get a piece of material in. The actual yarn that goes into that material has also got to originate in that country as well. So I think the key point I want to get across here is these rules are complicated. So for any company that is going down the route of either wanting to export their goods to customers in the EU and give UK preferential origin status with those goods, make sure you've looked at your origin rules and you've really applied them. And for those companies that are importing goods from the EU, into the UK and wanting to claim preferential origin status, because remember, duty is always paid at import. Again, make sure that what your supplier is telling you seems right, because otherwise, if they're not, and if you rely on that, a few years down the line or 18 months down the line, HMRC could come along and do that audit on you and find that it's not correct. Next slide, please. So those are the specific rules of origin. And as I said, these are contained in the annex to the agreement, and you apply them based on the classification of your goods. But the story doesn't end there. There is other criteria which has to be taken in place. And this criteria is contained in the main body of the free trade agreements. And there's a number of different concepts that you have to consider as well with those origin rules. So I'm just going to run through some of those now. So first of all, we have a concept called tolerances. For some of the rules, there's a little buffer zone of 5 or 10%. So if your goods don't quite meet the rules, there is a little buffer zone around values, etc. But this isn't applicable for every item. We then come across this rule called insufficient production. Now, this is one that has caught a few companies out. Insufficient production says that even if you use EU materials to make something, those goods are only originating as long as there is a proper production process that takes place. If you do a simple process, it's called insufficient production, and it wouldn't give those EU materials or parts or components or ingredients preferential origin status when that finished goods are made. So let me give you an example of this. You're in the UK and you're going to make grated cheese. All the cheese that you use to make that grated cheese, you import from Italy. That cheese has been produced in Italy, so it meets the preferential rules of origin. So it comes over to the UK with 0 rate of duty because it's been wholly produced in Italy, comes over to you in a big block. Now let's just talk through a hypothetical scenario here. You get the cheese and you perform a very simple operation, manual grating of that cheese, and you send it back to customers in the EU. Surprisingly, in that scenario, when that cheese goes back into the EU, it would attract customs duty. Even though it came from the EU in the first place, and it's going back, but it would attract customs duty, and the reason being is because the process that was undertaken in the UK is considered insufficient production. If, however, you brought that cheese over to the UK and had a lot of commercial machinery and a complicated production process, effectively to still grate that cheese and send it back to your customers in the EU, that would go back to the EU with 0 rate of duty, because it would be deemed that your production process was more than insufficient, and that would give that finished grated cheese UK preferential origin and allow it to go back into the EU duty-free. So this is something that has caught quite a few companies out already, this concept that just doing some production on EU materials is not always sufficient to give the finished UK product preferential origin status. The next one is non-alteration rules. This is effectively saying that when goods move from the EU to the UK and vice versa, they can't be altered. What leaves one country has to go into the other country in the same state. We also have various criteria within the agreement for how that preferential origin status is evidenced. It refers to things like statements on origin and the specific wording that the exporter must use to demonstrate that the goods meet that. And then finally, we have this concept of cumulation. And this is the concept that says, if I use goods from the EU in my manufacturing process in the UK and that production process is sufficient, then I can treat them as originating. There's other areas to consider as well. There's other concepts, but those are some of the key ones. And again, what I wanted to get across here was just by looking at the rules of origin in isolation is not enough. You have to consider the wider concepts as well. Next slide, please, Lauren. And then the final slide I want to talk about is to go through this accumulation point in a bit more detail, because this again is what is catching a lot of companies out at the moment. So this cumulation concept I talked about, it's common to all free trade agreements, and we can get varying degrees of complexity. But effectively, it says materials and processing which originate in one party, so the EU or the UK, count towards that originating status in the other party. But as I said, there's got to be a production process which is more than insufficient. Now, I've already given the example of the grated cheese, but the other one that was very much in the media in January was the M&S Percy Pig scenario. So this was where M&S has Percy Pig sweets, as we subsequently found out, manufactured in Germany. These sweets are manufactured in Germany. They then come into an M&S warehouse in the UK, where they are stored, they are repackaged, and then they were sent or are sent to supermarkets in Republic of Ireland. So effectively, the sweets are going EU, UK, back into the EU. The problem arose was when M&S tried to send those sweets back into the EU, so send them into Republic of Ireland, and then they were hit with customs duty. And the instinctive reaction was, well, why on earth should I pay customs duty, when what I'm sending back into the EU was clearly made in the EU in the first place? And then it came out that because of a piece of EU legislation which says once your goods leave the EU, they lose that EU status, and if they are re-imported back into the EU, tough, we have to treat them as if they're coming from a third country, so duty becomes due. Other free trade agreements have put articles in or paragraphs in to get around this and to allow for goods to come back into their country duty-free. Unfortunately, what we've been told is because this particular free trade agreement was rushed through at the last minute, that clause, that article, was not put into this agreement. So we are seeing lots of clients and lots of companies now who were not quite expecting this. As we said, manufacturing goods in the EU, bringing them into the UK, and then the if you will, the common theme seems to be they're then trying to get them to customers in the Republic of Ireland, and suddenly finding out they've got a duty bill there which they weren't expecting. So it's something to watch, and it's something to be aware of. So I think those are the key points I want to make in relation to this. My key message to everyone is, again, please don't think this is a simple or an easy process. It does work. You can get duty-free movement of your goods. You can import goods duty-free, but you have to be aware of the various criteria and evidence that you need to meet. Otherwise, as I say, at some point in the future, you could find yourself the subject of an audit. And if HMRC did find out that goods had been brought in and availed of preferential origin status, but it shouldn't have been done, they can go back 3 years to reclaim that duty from you. They can also issue financial penalties for non-compliance. So that's also another consideration. So if you are involved in this area, either as an importer or an exporter, please take sufficient time to make sure you're getting this right. Okay, and that's it from me. Thank you.
Thanks, Juliet. So now time for questions. We've got a few questions to throw at you. I suppose the first one is about or picking up on your points about HMRC. What capacity have HMRC got to actually conduct these inspections, and have you any indication when they might be able to start doing them? You're on mute.
Sorry. In preparation for Brexit, HMRC recruited 3,000 new officers. So we've now got 3,000 new officers out there in the field who have been tasked with doing customs audits. So, as I said, because we're still in this 6-month period of easement as far as border control checks and declarations, at the moment, HMRC's focus, as I said, is keeping goods flowing. However, in the second half of this year, we go back to full controls, and I think as well, as soon as we start to see lockdown restrictions easing, we will start to see HMRC doing more audits. They will cover this, and bear in mind, as I said, they're not the drivers here. If they get some of the very pedantic European customs authorities, like the Germans, for example, insisting that HMRC go and audit a UK company, HMRC do have to do that. So I think we can expect a lot of attention on this area going forward.
Okay. Okay, thanks. We've got a question from the about the sort of the where the pain is being felt. So you've described a lot of issues for UK companies and implications for UK to EU manufacturers. Are the EU companies and suppliers having to face the same challenges for both import and export?
Yes, they are. As I said, the rules for both sides are equally applicable. They're set out in that agreement. Whatever we're seeing in the UK, we can expect our counterparts in the EU to be experiencing the same.
And so by extension of that, then will HMRC be directing EU customs agencies to be inspecting or conducting audits of European suppliers, and the same rules apply?
They follow the same rules. They have the same opportunity to do so. Again, I suspect at the moment they won't, because the focus is on keeping goods flowing. But yes, in the future, there's every expectation they can do. And as I said, some of the European customs authorities tend to police this area a lot more than HMRC have done in the past. So bear in mind, they can themselves also instigate audits. So yeah, both sides will be feeling the pain.
Yeah. Okay. And I suppose sort of a lot of companies tend to use freight forwarders or third parties to manage their customs declarations and generate the paperwork. In the event of an inspection and finding something adverse, where does the burden of liability sit?
burden of liability always, always, always sits with the importer or the exporter. When you engage a freight forwarder as an importer or an exporter, you engage them on what's called a direct representation basis, which means that everything they do in your name as if they were an employee of your company. So in other words, you are responsible for information which a third party is submitting to the customs authority on your behalf. And what we see with a lot of companies is they do not check. They don't check what the freight forwarder is doing, and then they are surprised when HMRC turn up and do a more general audit and say, well, in your declaration, you, obviously via the freight forwarder, have declared this. Is this correct? And a lot of companies don't quite realise this and say, well, the freight forwarder did it, therefore they're responsible. No, legally, the vast majority of freight forwarders act as direct reps, which mean they do it as if they are part of your company. Now, there are a few that act as indirect reps, which means they take on some degree of joint liability, but they don't like doing this for that reason. So in quick summary there, liability is always the importer and the exporter.
Okay, thanks. Does the Incoterms that are being used in either sort of contract terms, conditions, or terms of purchase have any impact on how these rules are applied?
Well, what Incoterms do, one of the things they do is they determine which party is responsible for doing either the export declaration or the import declaration. So when goods move, if we take a scenario, goods are moving from a supplier to the buyer, the Incoterms cover who is responsible for moving those goods. So the cost of moving those goods, but also within that, and this is something that isn't always realised, is it's not just the cost of moving the goods, arranging the transport, it's also which party is responsible for doing the declarations. So for example, under a DDP, delivery duty paid, the seller is responsible for not only doing the export declaration from their country, but also the import declaration in the customer's country, because it's delivering the goods to the customer in a duty paid status with all the formalities done. Whereas, for example, under an ex-works scenario, which is the exact opposite, the supplier is only responsible for putting the goods outside their door. The buyer then is responsible for the export declaration in the supplier's country and the import declaration in their own. So depending on the Incoterm, it doesn't just determine who's responsible for moving the goods, it also determines who's responsible for doing the customs declarations.
Okay, does that then require, using your example of DDP, does that require the seller to have a presence, a registered presence in the EU to act as the importer?
Yeah, and this is where it starts to get a little bit more complicated as a result of Brexit, because both the EU and the UK have certain restrictions on who can act as an importer and an exporter, i.e. whose name can be put on that declaration. And in both cases, it limits it to companies who are established in either the UK or established in the EU. So what we've seen here is UK companies wanting to sell to customers in the EU on a DDP basis, again, for very good commercial reasons, are struggling slightly with the requirement that in order to be an importer in the EU, you have to be established in the EU. So again, there are a couple of freight forwarders out there who they're getting around this by saying, we'll take joint liability with you. Therefore, if there is an issue, the EU customs authorities can come to us. But still, a lot of companies are struggling with this because they're not established in the EU, and vice versa, if we flip that round for goods coming into the UK.
Okay, that's interesting. Another question about customs warehouses. There's a lot of conversation about establishing sort of customs warehouses. I'm assuming that's the same term as, or the same as bonded warehouses.
Yeah, it is.
What can you sort of give us a rundown of what that actually means?
Well, so when customs, why a lot of companies are looking at customs warehousing now is because if you have a typical scenario where you're importing goods from outside the UK, you're bringing them into the UK, that's your first duty point. You're then selling them to customers in the EU. You've then got a second duty point in that supply chain. So you've got 2 duty points. So what companies are looking to do is to put customs warehouses in place, because it takes out that first duty point. Because when you put goods in a customs warehouse, you suspend the requirement to pay duty and import VAT. If you subsequently re-export those goods out of the UK and out of the warehouse, you don't have to pay. So a lot of companies are using them as an opportunity to, if you will, almost maintain the current status quo and take one duty hit out of the supply chain.
Okay, and what's the, sort of the burden for setting up something
for setting
like that?
them up? Well, you have to be authorised by the authorities. You have to be authorised by HMRC. It's not an impossible process. It's not a difficult process, but you do have to provide details of your systems, and in particular how you're going to have an audit trail for those goods, because those goods are in duty suspension, so they're at risk. So the HMRC, all the customs authorities, just want to make sure that if you operate a customs warehouse, goods aren't going to disappear. If they came in and did an audit and said, you got this purchase order in last week, can you show us where it is in your warehouse, that you would have the systems and the controls to be able to do that. So the whole application process is really just about demonstrating that you have these controls and systems and procedures in place.
Okay, cool, thanks very much. And just sort of one final question. What are the implications on other sort of regimes or tax liabilities that companies are likely to face, you know, in terms of duty and tariff payments? Will that have a knock-on effect to sales tax, transfer pricing? And I know you're not an expert in that, but have you got a feel for what that might mean?
I think it hasn't got a direct impact, but I think things like transfer pricing, for example, I think because we've got far more companies now in the UK having to go down the route of customs formalities, having to pay duty, having to pay import VAT, it's become far more on HMRC's radar. Now, there is a link between transfer pricing and customs duty, because the transfer price drives the customs value when it's related parties. I think what will happen is that will just come under more scrutiny now. Okay. It will come under scrutiny, not just from a corporate tax perspective, but also now from an indirect customs perspective.
Okay. Excellent, thank you very much. So that's the last question. We've just got one final question about whether we're going to share the slides. Yes, this session is being recorded and will be loaded up onto the Institute website. Lauren, I think we're going to email the presentation to all the attendees, and no doubt we'll get it up on LinkedIn and various other portals if you would like to share it. So that concludes that. If there are no more questions, no more comments, thank you all very much for attending. Thank you very much, Juliet, for taking time out of your undoubtedly busy schedule to give us a benefit of your experience.
My
and
pleasure.
Hopefully everyone's got a better idea of the situation as it stands, and as Dee Ream once said, things can get better.
Thanks,
Thank
Nick.
you very much.
Thanks, everyone. Thank you.